Okay, welcome everybody. Thank you so much for joining our webinar this afternoon on decarbonizing the maritime industry and global supply chain. My name is George Dyer. I'm the co-founder and executive director of the Intentional Endowments Network, and very much looking forward to this conversation today. For those of you who are not familiar with IEN, we're a nonprofit peer learning network, and we support endowments and their service providers in advancing mission-aligned ESG impact investing strategies. With a large focus on climate, as well as justice, equity, diversity, and inclusion. And today's focus obviously is more on the climate side. If we could go to the next slide. As I said, this is a big kind of focus in our network. And endowments, particularly in the US, there's been a big move and a lot of conversation around net zero portfolios. We've got an initiative on this to help advance learning on what that means exactly and how endowments can go about implementing it. Lots of colleges and universities and other endowed institutions are facing stakeholder pressure. And at the same time, really seeing these issues around climate risk as material for long-term investors. And so I think there's a lot of potential there, and it kind of builds on a longer history of conversations around fossil fuel divestment commitments. And a compelling thing around these net zero portfolio commitments is that they're not mutually exclusive. They can be done with or without fossil fuel divestment, and expand those conversations to include engaging companies in all sectors, as well as investing in climate solutions, which will be a big part of our conversation today. Our net zero endowments initiative has been putting out resources, including a briefing paper for trustees and endowment decision makers, as well as a newer paper on leading with climate justice when thinking about these topics. And a big part of this are these educational events and webinars like today's conversation. This initiative is led by a steering committee of endowments, consultants, outsourced CIOs, and managers. And if you are not already involved in those conversations, please do be in touch to learn more and participate in this initiative. So to the next slide, just a few housekeeping items for the webinar today. You can use the chat function if you have any technical issues or comments that you'd like to share. Please use the Q&A box throughout the presentation to share your questions, which we'll get to as many as we can with the panelists at the end of the session. And the session is being recorded for those who have registered, so you'll be able to access it afterwards as well. So with that, I'm really pleased to introduce our panel today. We've got some leading experts in this space, and our conversation will be moderated by Tufutri Akdim, who's Senior Vice President of Purus Marine and Entrust Global, Bank Relations, ESG, and Investor Relations. We'll also hear from Julian Proctor, who's the CEO of Purus Marine, and Sven Eng, who is Portfolio Manager at Entrust Global. So again, these are some leading thinkers and practitioners in this space around maritime industry, and particularly looking at efforts to decarbonize this critical sector in the global economy. So with that, I will hand it over to Tufutri to get the conversation started.
Thank you, George. Thank you for hosting us, and thank you for everyone joining this call. So my name is Tufutri. I'm part of Entrust and Purus, and I'm focusing on overall ESG financing and investor side. My background has always been in the shipping side, on the maritime side. I'm quite passionate by this industry, and I hope you will be after this call. So I have been focusing on the financing and the recent year with the more focus on the sustainability side. So let me start with a few words on Entrust. So Entrust is a 20 billion global alternative asset manager based in New York with offices around the world. One of our key capabilities is our maritime investment platform, Blue Ocean. Today, I'm joined by Sven Eng, the head of Blue Ocean, and Purus, and Julian Proctor, the CEO of Purus Marine, a company that Entrust has invested in and raising capital through a private equity style vehicle called Blue Ocean for Impact. So I think we are all agreed that today there is an issue. A lot of investors, including endowment, are very active on finding impact investing, but there are not that many strategies that can do that in a meaningful way, and more importantly, on a measurable way. So that's why we are very excited today to host this panel, because we believe we do have an investment strategy that is not only investable, but also provide a real and measurable positive environment impact which can resolve that challenge that everyone is facing, and also comply with all the pressure from your students and trustees. So Sven, please, can you introduce yourself and tell us about why you are so excited about devolution for impact strategy?
Thank you, Tufi. Thank you, everyone, for joining. Good morning, good afternoon, wherever you might be. Yes, so I have been in the maritime industry for about 35 years now, and I think there's no doubt that what we're looking at now in terms of regulations related to the environment is maybe the largest challenge we've ever had in this particular industry, the maritime industry. So I've been for 35 years in the industry, mostly on the banking side. But the last 12 years or so, I've spent most of my time on the asset management side. I joined Entrust Global in December of 15, so it's been 6.5 years. And my mandate then, when I joined, was to build out the direct lending platform focused on the maritime industry. So that's really when we started to get into this industry here at Entrust Global. The whole thesis for what we were doing was really around banking dislocation. Entrust Global is very focused on dislocations. And what we had seen in the maritime industry, which typically would be financed by commercial banks on the debt side, was that banks were starting to pull back post-financial crisis because the new regulation made it more expensive to lend. So we felt that this was a good time to get into this industry and focus on lending because of the major changes in the competitive environment. So 6.5 years later, we built a very sizable business, multi-billion-dollar business, and we have clients around the world that are always in need of debt capital because the maritime industry is very capital intensive, and Julian, I'm sure we'll get into that. So we have 15 people within Entrust Global now, separate from Purus, entirely dedicated to the maritime industry, which is something quite unique when it comes to an asset management firm. As we were building this business on the lending side, we started to see some interesting developments in the industry itself. Number one, we started to see a lot of new regulations coming into the industry, and these regulations, unlike in the past, were for the most part entirely focused on the environment. So there's no doubt that regulations are going to drive a future where we have to focus on much greener assets than what we have in the past. The other development we started to see throughout these 6.5 years is that end customers were very, very focused on starting to decarbonize their supply chains. And the maritime industry is kind of the lost or the forgotten part of the supply chain. It's a very, very big part of the supply chain, but it's also the most difficult one to decarbonize. But if you're really going to decarbonize your supply chain, you also have to deal with the shipping side or the maritime side. So with that in mind, we start to look at how can we help the industry transition into a greener future. And that's why we established Purus Marine. And the company is going to own, it already owns, and will own even more assets, low emission assets, in some cases zero carbon assets. And we will have all of those assets on long-term fixed contracts to end users, large corporate clients, as well as governments. And the whole thesis around this, on the lending side, was the banks pulling back. In this particular case, it's actually the equity that's missing, and we'll get into that in some slides later on. But that's my intro, Tufi, and I'll push it back to you now.
Thank you very much, Sven. So now, Julian, if you can introduce yourself as well.
Thanks, Tufi, and good morning, afternoon, and evening for all of you, wherever you might be listening in from. I founded this business together with Sven several years ago now. For the previous 27 years, I'd been building a number of marine infrastructure leasing businesses, some of which we took public, which we ended up selling to large financial institutions, but always with the same business model. The business model being the ownership of critical marine infrastructure, could be terminals, could be vessels, but always providing that equipment, that know-how to your customers. and doing it with long-term service contracts. Now, what's important for everybody to appreciate was when we built Purus, the goal really was to provide our customers with just some of the most fuel-efficient equipment that there is today. And fuel efficiency is important because fuel efficiency means carbon efficiency. So when you're focused on reducing your fuel costs, you're completely aligned with your customer. It gives them a better proposition. It also means that they're more carbon efficient. So you're completely aligned. It means your business is sustainable and generates sustainable profits. So our business today, we're a multi-billion-dollar business. We have several hundred employees. We operate across sectors which are highly aligned with the energy transition, sectors which have got both favorable tailwinds and sectors in which we really have a very unique capability in how we compete with those people that we find in those respective sectors. That will be renewable energy. We're in the mass transit business, marine mass transit business, logistics, as well as movement of gas. We move low carbon gas molecules. Now I'm going to pause there, and we're going to get into this in a lot more detail. But needless to say, it's a fantastically attractive industry opportunity that we found ourselves in. And we're excited to talk to you more about that when we get the chance. So thank you, Tuvi.
Thank you very much, Julian. Yes, just before we dive into more details of what Purus does, maybe Sven, can you just set the scene on why we should care really about decarbonizing the maritime industry? You have give some a few thoughts on it, but maybe we can give a bit more details of what really shipping impact has on the supply chain.
Thank you, Tuvi. Maybe we can get the slide up, slide number 1. So just to paint the picture, so the maritime industry is a very large global industry, and when it comes to movement of goods and raw materials, finished goods, and so on, when you think about global trade, almost 90% is actually seaborne. So the industry is very broad. All these different products are carried on ships across the oceans. Now, so it's not the worst when it comes to polluting when you break it down on a per ton basis, but the sheer volume makes the industry a major polluter. But it's roughly a $3 billion industry when you look across the entire ocean industry. And roughly 10 to 12% of the global population actually relies on the oceans for the livelihood. Currently, roughly 3% of global CO2 emissions actually comes from the maritime industry. And this is where it gets challenging, because if we don't do something soon to start to reduce the carbon footprint of the industry, we're going to go up to probably 17 to 20% in the next 3 years. So we really need to start now. Not in every sector, and Julian will get into this, is there a silver bullet or clear solution right now, but there are a lot of ways we can actually improve the footprint. And as Julian mentioned, we already are doing things where we actually are zero carbon as well. So if you look at this slide, it's to give you a sense of the fact that just about everything that you see and touch and use every single day at some point would have been aboard one of these vessels, whether as raw materials or finished goods. And the challenge of turning this into a greener and zero carbon type industry is massive. We're estimating that roughly $3.4 trillion is going to be needed for this. So obviously a huge opportunity, and also a major challenge, as Julie mentioned. Maybe we can get to the next slide quickly. So this is showing the path forward. And on the left-hand side, you see some of the various toxins that these vessels around the world emit. And the carbon dioxide is the major challenge. We already have relatively good solutions for the other toxins. LNG, for instance, clean gas is actually much reducing these other toxins. Now, the carbon footprint is the main challenge. And if you're looking at the path forward, we are actually looking to be zero carbon sometime in the next decade. whereas the Paris Agreement and the IMO agreement calls for 50% reduction by 2050. So a lot of work needs to be done, and we already will have a carbon tax scheme in Europe. It says 2023 here, but Julian, correct me if I'm wrong, I think that's been pushed back to 2024 now, but it's coming. And that's the key thing to keep in mind, which means that anytime you trade one of these ships to Europe in the future, you will be hit by a large carbon tax unless you have efficient ships when it comes to the carbon footprint. So this is going to force changes. There's no doubt about that. And on the right-hand side there, you see some of these companies that already have made announcements in the past that they're looking to be carbon zero in the future. And these companies really rely, for the most part, on the supply chain to be zero carbon. And that means that the shipping part of it also has to be zero carbon at some point. So this is setting the stage. Maybe quickly to the next slide. And this is really talking about our opportunity and why we're doing what we're doing. The chart on the left-hand side looks kind of funny, the way it's presented, but it's actually showing reality. If you're looking at the global maritime fleet, the entire fleet, roughly 1% today is actually lower carbon, so what we would call a green asset. The rest are old-fashioned, propelled by bad fuel, and so a major change needs to happen. Now, banks already are looking to finance greener companies and greener projects. So bank debt is readily available for these types of projects, including Purus Marine, because this is what the banks want to focus on. They have basically reallocated the capital to greener assets and greener companies. The piece that's missing is the equity, which is shown on the right-hand side. There's been very little equity raised in this industry over the last several years. And this is where we're trying to fill some of the gap. And that's also why we're seeing a lot of interest for this type of a venture. So with that, Tufi, I hope that sets the stage so that Julian can get more granular.
Thank you. Yeah. No, thank you very much, Sven. I think it explained clearly the challenge, the real challenge there. So why not, Julian, you give more color on what's the solution, what's the opportunity for real climate impact in maritime finance?
Great, thanks, Tufi. Maybe it's good to go to the next slide. If you think about where we are today, there is an enormous challenge which we have amongst us. That is within transportation. And that could be airplanes, it could be ships, it could be trucks. These are sectors which are hard to decarbonize. There is the need to materially cut carbon emissions. If we're to stand any chance within that 1.5 degree world, which the scientists have said we're already very close to reaching. So time is of the essence. And yet there's an imperative to make progress much faster than we have thought. And that's really the goal of Purus Marine, which is to be a lighthouse, to be at the forefront of that change, to drive that change. The goal is to achieve decarbonization ahead of a number of the Paris Agreement goals, ahead of a number of the supranational goals, because it's important. There's time value very simply to reducing greenhouse gas emissions. So we have set the goal, and it is a lofty one, that by the 2030s, our fleet, our assets, we own a variety of infrastructure, as I mentioned, will be net zero carbon. And we think we're well underway. We have certain business lines which are zero emission. We have others which have the optionality, the modularity to achieve that as well. That is when the technology becomes commercially viable, when it becomes cost effective. So there's reasons to be optimistic. If we go to the second slide, Tufi, please. The reality is that the climate challenge plays out differentially between different sectors, and not all sectors are equal. The approach which is needed to compete is also different. If you look at the renewable energy business that we have, there's already today commercially viable technology. There's the use of batteries, there's the use of fuel cells. The matter is very simple. The energy demands which are required, the distances which are traveled in that sector are much shorter. It means that there's cost-effective, commercially viable technologies today which allow for low carbon or zero emission transportation. That is not the case in other sectors. If you're moving manufactured goods halfway around the world, the distances are long, the energy demands are momentous. It still means that we exist for those type of transportation assets in the molecule world, and a world which largely depends upon heavy hydrocarbons and in some cases lighter hydrocarbons, but it's a hydrocarbon world. So we've been very careful to focus on those sectors whereby we can make the change. Change can be made today, and that we're ready in the future in those harder to decarbonize sectors when the technology is available to move into them too. So it's a matter of sequencing. It's a matter of prioritization. Let's continue. The business model is important. What we do is we combine the people know-how, and as I mentioned, we have several hundred highly skilled employees which are involved in designing, the engineering, the operation of these often highly critical assets, highly skilled assets. When you have a motor and batteries, the type of skills that you need are different than a combustion engine. When you have a fuel cell, it's different again. So the skill set, the knowledge becomes incredibly and increasingly important. So we combine that people skill set together with that infrastructure that I mentioned, and we're providing on those long-term contracts to our customers. We generate cash flows as a result of those long-term service contracts. But as I mentioned, we only compete in certain sectors. We go back to the previous slide. And in that previous slide, what we had said, there's certain sectors where we're energy transition aligned. There's certain sectors where we can decarbonize today. And there's those that we can't. We focus on 4 areas. One is renewables. That division is called Purus Wind. Put very simply, we provide critical infrastructure, floating hotels, logistics services to big energy companies like Siemens, like GE. In our ferry business, it's mass transit, public mass transit, lifeline services, and we provide them in many cities. In our logistics business, it's about the movement of manufactured goods. We do that largely within regulated environments, which are protected by carbon cap and trade schemes. Put very simply, the technology that we use, carbon capture systems, is suited well to those markets where the cost of polluting is prohibitive. There's a real carrot and stick. And lastly, we also compete in the gas business. That is the movement of light hydrocarbons, like liquefied natural gas, and increasingly our focus on zero carbon gases, such as ammonia. And having those skills in the carriage, in the handling of these complex, often cryogenic gases is important. The operations, the commercial skills, highly desired, increasingly rare. Very few competitors. But in each one of these sectors, we meet the same conditions. Energy aligned, sectors in which there's substantial barriers to entry. And that's either due to technology, people, or regulatory reasons. And sectors whereby there's the opportunity to really carve out a competitive and niche position to your customer. We don't want to be in commoditized and overly competitive markets. It's hard to compete. Let's go to the next slide, Tufi, and more.
Thank you. Thank you, Sven. Yeah, that's a good summary and snapshot of what Purus is actively doing to decarbonize the maritime industry. So I think now is a good time if you can go through the 4 sectors you have just talked about. So let's start with the offshore wind.
Thanks, Tufi. One of our divisions is active in, as I mentioned, the provision of hotels, the provision of the movement of people. It's a people movement business. It's a people hotel business. Providing big customers such as the OEMs, and they're people like GE, Siemens, and Vestas, as well as the wind park operators, people like Ørsted, Equinor, Iberdrola, with those skills. And we do that with cutting edge equipment which really uses the best in class technology, often batteries. Many of our vessels are zero noise, in ports can operate at zero emission. And these are qualities which our customers demand. It's not a nice to have, they demand. But they also demand our skilled people. Our skilled people are professionals when it comes to operating this increasingly complex equipment. And they are scarce in numbers. So being able to ensure the boundaries and the long-term tenure of your staff is important. They need to be well rewarded, well looked after. Key part of growing your business. As you probably know, the dynamics in the wind industry are highly attractive today. There is a substantial amount of growth in turbine installations. There is a substantial need for turbine maintenance. The challenge, simply put, is the lack of availability of people, the lack of availability of that infrastructure, those floating hotels, those equipment to move people. So the industry conditions are attractive. That's why we compete there. The impacts are material. We're supporting the growth of zero emission renewable electricity. And as we all probably know, that's become an increasingly important part of many countries' energy security as they look to diversify many of the sources of their energy today. Let's go to the second slide. The movement of people across cities, particularly in places like Europe, is viewed as not only of social importance, but one whereby inner urban environments need to be kept clean and hospitable for all of their residents. Those inequities need to be addressed. That is, the most central urban environments, often those which are hit by the largest pollution. Often that's the case in cities like Rotterdam, Copenhagen, Amsterdam, Antwerp. And putting in place transportation systems, whether or not it is buses, whether or not it's taxis, whether or not it's water systems like the ones that we own and operate, providing local inhabitants with cleaner air, cleaner transportation, is viewed by governments as critical infrastructure, critical for the provision of those public services. What we provide is we provide the know-how of that design, the building, the installation of these mass transit systems. We own them and we also operate them. So there are material barriers to entry. Put very simply, these are complex systems to design and to operate. And we have electric systems, which are EV ferries, plus superchargers, plus battery charging systems. We're also in the process of upgrading some of our more conventional ferries for the use of hydrogen, which will be a true industry first when it is introduced in 2023. But what is important becomes a blueprint to scale. A blueprint to scale across Europe and other developed markets, such as in North America and in select Asian markets. Let's go to the third business, which is the movement of manufactured goods. Manufactured goods are needed for every part of the supply chain. And I think we have seen over the last several years just how important the integrity of the supply chains are. And just like all of our other assets or other businesses, we have long-term contracts, just as we do with our ferries, just as we do with our wind assets. We do in our logistics business too. We own container vessels, which work within the regulated European waters, providing very large port customers with services to allow them to move boxes, container boxes between their ports. But what we do, we're in the process of installing engineering carbon capture systems, which will be an industry first, which will allow us to be more carbon efficient. And in markets where there is a carbon price, that is important. This will provide a track record, it will provide operational know-how, which will ultimately allow us to scale up business, deliver these services to a wider number of customers, a wider number of ports groups. It also provides learning and know-how, which can be spilled over to other divisions. How these same systems can be used in our wind business, as we'll talk about in a minute, in our clean energy gas business. Learning and diffusion, we believe, is highly important. The fourth business that we have is the movement of gas molecules. As I mentioned, we move liquefied natural gas molecules, and we are in the process of acquiring assets which move ammonia molecules. LNG will be the mainstay for the next several decades. There will be a transition from LNG to synthetic to biomethane, and our equipment will still provide those floating pipelines to our customers such as BP, Cheniere, and others. And our floating pipelines are increasingly important. Energy security is probably a word you will hear increasingly again and again over the next several years. And governments will turn to businesses like ours to provide that diversification, that security, and that long tenure of energy delivery. Our business is also positioned to support that transition to even lower hydrocarbons and zero hydrocarbons. Gases like ammonia, in the future gases like CO2, and if you look further ahead, the transition to gases like hydrogen. But having the people skills, and you'll hear me say this all the time, having the people skills is important. Without the knowledge, you can't make the progression from carrying cryogenic cargoes to more complex cargoes. And we are putting the building blocks in place. We are making sure we are prepared for those future opportunities.
Thank you. Thank you. Thank you very much, Julian. I think it's now very clear all the four different sectors Purus is actively working on the decarbonization. So let's bring this all together. Since the beginning, we have described the strategy as being that can really quantify the impact. So we understand how Purus is working on that. But can you be a little bit more precise about how you can demonstrate that, not just to our investor, but all our stakeholders are obviously very much focusing on the measurement.
Yeah, stakeholders are important. It's your customers, it's your suppliers, it's your lenders, it's your shareholders, it's your employees. It's a lot of people which make your business and make us successful. When we compete and deliver innovative solutions to our customers, they care about what are our impacts. How do we deliver not only cost-effective transportation, be it the movement of people, the safe movement of people, but can it be done fuel efficiently? Because that involves real cost dollars or euros. Can it be done carbon efficiently? If you're in a regulated market, if you're fuel inefficient, it also means you're carbon inefficient. It means your fuel bills are higher and your carbon bills are higher. So we can measure using independently verifiable data to show the real impacts to our customers, to our other stakeholders. It's valuable. Some of our customers value it because it allows them to report the impacts that they're making. They're concerned with their supply chains. They're concerned about their scope 3, in some cases, scope 4 emissions. We can provide them with that data. It can be independently validated. It can be verified. Some of our capital providers care about it. Increasingly, there's regulatory and some are voluntary, some are non-voluntary regulations requiring disclosure. We already have the systems, the tools in place to provide that information. And because of the positioning of our business, we're viewed as an incredibly attractive opportunity for many of our capital providers because of those positive impacts that we make to carbon emissions and the climate. So when you take it as a whole, the technology that we have established, the methodologies that we have designed, the reporting that we are providing is viewed by our stakeholders as valuable. It's viewed as something which is considered a template for others to follow. And I'll leave it at that. Thank you, Tufi. I think you're on mute, Tufi.
Sorry. Thank you very much, Julian and Sven. I think we feed you with lots of information. And really don't hesitate to raise any question in the Q&A poll. We are really here for that. So don't hesitate.
Great, thank you, Tufi and Julian and Sven. That was great, and such a, as I said at the top, I think such an important, critical piece of the global economy that's tough to abate in this whole climate challenge, and exciting to see such direct solutions coming to market. So we've got a question here around that slide that showed the sort of pie chart with a very small percent of the maritime industry that's currently low carbon. It's about how much of the market can Purus' strategy help to move to low carbon, either directly or indirectly? Do they have goals or targets in terms of sort of either how much I think you all intend to tackle and move to low carbon, or can help the sort of broader industry move that way?
So we're focused on certain sectors. As we mentioned, there are sectors where there's immediate impact, where the technology which we have, it can make immediate impact. And this is important. There's many sectors where that technology will become viable and available over the next 5 to 10 years. And we're focused much more on those more immediate opportunities with our current business mix.
I think also, Julian, the different slides of the 4 sectors we're actively working in, we're actually showing the impact we're making today on the bottom of each slide and where we expect to get to by the 2030s. So that should tell you where we're certainly aiming to get to eventually. But already today, we're making a major impact.
Yeah, that's right, Sven. And I think if you look at those areas, I'll use mass transit as a case in point. One of our businesses alone provides close to zero emission transportation in certain European cities. And that means that there's people in those urban environments which now have demonstrably better habitats to live in. We prefer to focus on these priorities as opposed to making very small impacts in sectors where the technology just isn't mature today, frankly, George.
That makes sense. And yeah, I think, I think as you're alluding to, the sort of health and human benefits to that are a big deal. So I've got another question here about what are the key risks to the strategy, both from a decarbonization perspective and a business perspective?
So it's really the other side of the same coin, George, that I mentioned. It's about being selective, and it's about being disciplined. It's about prioritizing your objectives. We prioritize commercially viable technology in specific sectors. If we were to take a much wider approach, we would increase the risks, the business risks that we would have. Because very simply, the clock speed of technology is evolving much faster in some of the very heavy to decarbonize, very hard to decarbonize sectors. And when the clock speed of technology changes faster, you take more risk. We frankly believe that we'd prefer to focus where the clock speed is slower, where many of the big questions have already been settled. That's where we like to focus. So for us, it's about reducing our business risk, avoiding sectors where we believe there's unattractive characteristics like the one that I've just mentioned. It's a key priority for us.
I guess, Julian, we should also highlight that all these assets, we employ them long term to very, very strong end users, and thereby really reducing the risk. This is not a business where you're hoping for appreciation in the underlying assets to get a good return. It's really a cash flow type business, long term fixed employment. So very, very carefully selecting your counterparties is absolutely key, and making sure that you provide them with the assets that they need, not just for the next 1 or 2 years, but for the foreseeable future.
That's right.
Great. I've got another question here, and this relates to some of the conversations we're having within our net zero initiative too. But it says many companies are looking to make their decarbonization commitments by using carbon offsets. Are you doing the same? And yeah, I guess how you see the role of offsets and thinking about this decarbonization effort.
We are still thinking through the role of carbon offsets, to be honest, George. We are focused on much more physical, tangible results which we can control, results which allow us to build capability, which can push the business forward and deliver further results. We're not convinced that offsets provide that backdrop. So for us, we're going to continue to focus on physical solutions to carbon reduction. We're going to focus on continuing to build the people skills, the capabilities to deliver those carbon reductions, and we'll leave carbon offsets to other people. That's it's not for us.
And a bit of a related question here, for those investors with net zero commitments, how do you report back emissions data, and how do you help them think about the avoided emissions that your business model drives? Now, I think you mentioned the emissions reporting, that you've got systems set up for that, but maybe talk a little bit more about that. And then, yeah, I think this is something that comes up as we talk about net zero portfolios and how avoided emissions get calculated, even if they don't show up at the portfolio's carbon footprint.
Yeah, it's something which we spend a lot of time talking to our customers about. You can imagine built urban environments. If you can bring in zero emission transit systems, it doesn't matter, frankly, if it's a ferry system or a bus system or something else. But if you can do that, the avoided emissions that you have on material, the government wants to know, the public wants to know, and they want to see that data. So we work with the government to provide them estimates of what the avoided emissions would be. We can also provide them with the direct reductions in emissions that our specific equipment or systems can deliver as well, relative to utilizing in the case of ferry systems, hydrocarbon-powered propulsion systems, as one example. So we have the data, we have the methodologies, we are reporting. We're reporting to government customers. We are also working with them on ensuring that they can calculate their avoided emissions as well. The public want to know. That's important for them. It's important for a large number of different social groups. That's the way that we're focusing.
Fantastic. Yeah, this next question might be a bit related to, or at least in my mind has sort of a tie back to that. But you said your logistics business were focused in markets with regulations like cap and trade schemes. And do you see that expanding to unregulated markets, or is the price on carbon necessary to expand into those markets?
So you've got to, that's a big question, frankly, for the next 15 minutes. So I'm going to try and take it in a slightly different way. You've got customer pressures, people like all of us on the call today, and they're going to be putting their own price on carbon, which is what already happens. And that happens by the decisions you make about what you buy. So if you're some of the very large end user brands, which have made commitments, which they have, that will ultimately drive the behavior in their supply chain. So in a non-regulated way, the consumer will be the single biggest factor in driving these decisions and ultimately driving the decarbonization of supply chain infrastructure. I'm going to leave it at that because it's an incredibly powerful force and it is happening at speed. If you look at the regulatory question, which is how do you stimulate the transition to and accelerate the transition to lower carbon infrastructure? And this is about accelerating and transitioning when you look at cap and trade schemes. Those which are active in Europe, those are active in California, they have been shown to be effective. They have been shown to create momentum, to create focus, to create acceleration in the adoption of technologies which may have taken longer in the absence of regulatory pressures. So they combine and they conspire together. You have the long-term structural changes, which are consumer attitudes. And then you have carrot and sticks, whether it's cap and trade schemes, whether it's subsidy programs, whether it's public-private partnerships, which work to really accelerate that focus on technology uptake. I'm going to leave just there.
Great. Just my own sort of follow-up. Where do you see the role of investors that are prioritizing this? Do you see that as a big driver in that overall mix of things that are influencing the transition?
I think the cost of capital is one of the most important factors in any business decision-making. And the more capital which flows towards sectors which consider all the risks faced, be they environmental or other business risks, that brings down your cost of capital. It's clearly a benefit. I do think, however, in the short to medium run, there will be road bumps. There'll be road bumps because there's been too much, what's the word, greenwashing. Too many people which don't make a change, the business models don't deliver impact, their business models aren't sustainable. And I think people are tired of that. I think also energy security will raise its head for the next few years, and that will be a focus. That's going to be something which we're all going to have to be very mindful of in businesses like the ones that we have. But there's an inevitability of the long-term trend. Money is flowing to sustainable businesses like the ones that we have, and the cost of capital will ultimately be the arbiter of the success of the profitability or not of projects. So I think the answer to your question in a long-winded way is yes.
Excellent. Well, you mentioned making an impact there. We've got a question about making sure to provide a meaningful impact. How big of an impact do you expect to make?
well, hell, if you look at our ferry systems, some of them are zero emission. I mean, how much more of an impact do you want to make? That's meaningful. But I think there's, as I said, everything is sector specific, sector focused. It's there's certain areas which is easier for us to make bigger impacts. There's certain parts of the business it's harder to make bigger impacts. That's why, again, we focus on certain areas, and we've avoided certain other areas. There are constraints to that impact, which might be where the person who asked the question is going. How scalable are the impacts that you can make in those sectors where your technology is commercially viable today? Now, that would be a good question, because in certain markets, there are limits to that growth. But what we're trying to do is we are trying to scale by going through a wider number of geographical markets, because there are limits to that scaling up. There's only so many ferries or port systems you can put in the Netherlands. Then you got to do the same in Belgium. You got to do the same in the United Kingdom. You got to do the same in the United States, right? It's easy to say, hard to do. You need collaboration. Most of these are public-private partnerships. So the question is a good question, but I think it's one really about scalability and your ability to scale.
Great. Sven, anything to add on any of these recent questions?
No, I think Julian, as usual, gave some very eloquent answers, so I got nothing to add to it.
We've got another one here that I think is related to where you were just going, Julian. So you've described how big the opportunity set is. Why aren't more people talking about this? And I just add my own sort of question or related piece to that about the kind of competitive landscape. Are there others looking to drive this transition? And how do you think about that in terms of obviously wanting to be ahead and have your own competitive advantage as a business, but also wanting to see that broader transition happen?
You're always going to have competitors. Competition is good, and there's lots of competitors in each of the sectors that we have. I'm sitting here in Tokyo in Japan, and I can tell you the conversation here is at fever pitch regarding the solutions, the transition, the great corporates which are over here driving that transition, and what they're doing about it. So there's a lot of talk, there's a lot of focus, there's a lot of energy, resource, effort going in to exactly this. However, we have been at the forefront of this now for several years. We are continually building our capability and our skill set. We're continuing to keep our lead, continuing to keep our edge when it comes to the competitors, which is valuable. So competition is good. It keeps us more competitive. But there is a relentless focus which is occurring in terms of the energy transition. And that doesn't matter if you're in the States, Europe, or certain parts of Asia. This train has left the station.
Maybe, George, to add to what Julian said, I'm actually sitting in Oslo, Norway. This is what everyone's talking about. It's all about the environment. It's all about greener assets across the energy sector as well as the transportation sector. So it's not a lack of talk and discussions around this for sure, but there's probably more in certain parts of the world than others. But it's definitely at the forefront here. And here they're talking about building up production of ammonia capacity. They're talking about how to distribute that. So it's definitely ongoing. So there's a lot of developments taking place.
Great. I think so. We've got just a few minutes, but I think time for one more question. And we've got on this: what kind of interest are you seeing from endowments and foundations? And again, I would just add to that, within our network, we have quite a span of endowment sizes, from quite small, under 100 million, up to quite large, several billion. And I guess within that, is there sort of a sweet spot of investors where these types of vehicles, strategies would be most appropriate?
So one of our shareholders is investors is an endowment. We are very close to another large endowment also making a commitment, and they believe that there is not only a strong business case, which there is undoubtedly, because we are sustainably more competitive than our competitors by doing what we do. It's important. By focusing on fuel efficiency, you focus on carbon efficiency. It's good for business. It's good for the environment. So they understand the strong business rationale, but they also understand the pressure that endowments and their student bodies are putting them under, and the need to show change, the need to show to their student bodies that change is happening and that they support that. So we are a great opportunity and a great example of being able to do both. Have a business that makes sense and have a business which allows endowments to show that there are business cases that make sense, which can also be a force for good. And that's an attractive opportunity.
Great. So I think we'll leave it there for questions. And Tuvia, I'll hand it back to you to see if you all had any last words before we wrap up in the next couple of minutes here.
Yes, maybe I will just add one part, which is actually quite important for us. Both Sven and Julian highlight the skill set in the team, which is really massive. And I'm a recent joiner for all these guys, and I'm quite impressed. And there is the real diversity of expertise within the industry. And it's really something quite unique. I have not seen that much, to be honest. I was on the other side. I have various shipping as a client in my previous experience. And seeing those skill sets and experience all together, it's really creative value. So I just want to highlight that we speak a lot about diversity, which is key in everything in terms of managing your risk, being competitive, but having the right people who can, maneuver and be agile around this complexity of our world today is quite unique within Purus. That's all. I don't know if there is another question.
That's it. Unless Julian or Sven, if you have any final thoughts.
No, I think Tufi summed it up pretty nicely. Not only in Purus do we have a lot of diversity and experience, and as well as in Entrust Global. Overall, we have a real focus on the maritime sector within the firm, and we're continuing to build on that. That's what I wanted to finish with.
And I'd just like to say thank you to everybody for tuning in.
Yeah, thank you, of course. Thank you, everyone. And, we appreciate George. Thank you for setting this up, and appreciate the opportunity to talk about this, because it is important. We all have children, and they will have children, and we hopefully will do something good for them as well.
Well, likewise, thanks to all of you for taking the time and for all the great work you're doing in this space. As we've said, it's a really critical piece, sometimes I think overlooked as we look into sort of how the whole global economy operates. But as we try to drive this shift to net zero in the real economy, it's an important piece. So thank you very much for your time and participation. And we'll be in touch. Thanks everybody for joining. Have a great day.